Traders at Axis Bank say there's continued demand for long-end bonds with emphasis on the 2042 and 2050 papers as investors focus on today's Tbills auction. Akpevwe Oputu, team member, Treasury Coverage at Axis Bank, joins me now for more market updates. Akpevwe, thank you so much for joining us, and you're looking lovely in black today. Let's do an overview of the market performance you're seeing. How liquid is the market as well? Looking at the fact that we're also expecting some FAC inflows and then the Naira rates. Let's start with that.
Okay, so coming into this week, we saw system liquidity open in a repo of about 57 billion and the OMO maturity of about 70 billion coming into the system did a lot as we saw rates in the money market space trade around 16% on OPR and overnight. For today, we just have the NTB auction, so we don't expect that to affect the market liquidity as the inflows for the auction will come in on Thursday. So we expect to see a rollover of that maturity. But system liquidity remains relatively low. Opening yesterday was about 22 billion repo.
Okay, now talking about the Tbills auction for today, investors are focusing on that. And in terms of the volume of trade we've also recorded within the Treasury bills market, that is, the bids have remained elevated of some sort. Now, in terms of comparative analysis with the offers being made, let's talk about the concentration on the long end.
Okay, so at the NTB auction today, a total of about 260 billion is on offer. We expect that the DMO will roll this over. However, we expect to see rates trend higher. We've seen this in the secondary market. The long end of the curve is currently trading around 4.5% levels. Remember, at the last auction, it closed at 2.24%. So we expect to see the auction close relatively higher from where it closed at the last NTB auction. So the 90 days currently closed at 0.1, the 182 days closed at 0.3. But in the secondary market, we've seen bills and offer around the OMO and special bill trading around 3% levels on those tenors. So we expect to see higher yields at the end of the auction today.
And talking about patterns we're seeing in the bond market now, we're seeing the 2042 and 2050 hold investors' interest. However, we are seeing some reduced volume of trading with the 2037s due to weak appetite. Talk us through what's playing out here.
Okay, so the 2040, 49 and the 2050 are not very liquid right now in the market. So we've seen the rates trend upwards, trading around 6% and level on the long end of the curve. However, investors have really picked on the 2028 on the run bond. You remember it closed at 13.99 at the last auction. We saw offers in the markets trading around 13.93% as at close of business yesterday. So we still see investors looking more at the bond space for clamoring for higher yields around those tenors.
What's your outlook for the rest of the week?
Okay, so on the money market space, we expect liquidity from the FAC inflow to come into the system, and this will drive a lot of buying interest in the Treasury bill space. But for now, we just have a thin liquidity in the market, so we've still seen some sell-offs on the Treasury bill space, and we expect that this will continue until the FAC inflow comes into the market.